Hi, we've got Shadante Dozier. She's the Community Investment Business Development Manager with the Federal Home Loan Bank, Atlanta. Not all of you are in that district. She's going to touch on, though, that some things that will interest you even in your district. She's the Business Development Manager, and she joined about 4 or 5 years ago, and she hails from Nashville, Tennessee, so you can see by her education that she's there, but and she's engaged and getting married in May. So I'd like to introduce Shante Dozier.
All right, good afternoon. So, thank you. I want to thank you all for, first of all, giving me the opportunity to attend today. And Brenda gave me some great information on the Fuller Housing before we talked. So it gave me a lot of good insight on exactly what you do in your communities. And I have to say I'm very impressed that your organization has grown as quickly as it has. So what I'll do today is kind of talk to you about some of the products that the Federal Home Loan Bank of Atlanta offers. And hopefully you'll see how these products can tie into some of the great work that you're already doing in your community. So as I go through this, feel free to stop me at any point. Feel free to ask questions. I definitely want this to be interactive. So if you need any information or have questions, feel free to stop me. So let me start off by asking, how many of you have heard of the Federal Home Loan Bank of Atlanta? Okay, wow. Normally when I ask that question, there aren't very many hands that go up. So generally we think of ourselves as a pretty well-kept secret, but it's good that you guys are at least familiar with us. And just to kind of give you a little information, we're actually a co-op. So what that means is we're owned by a little over 1,000 member financial institutions. And these are bank, credit unions, savings and loans, so all types of financial institutions that actually own stock in us. And one of the things that we do through our financial institution is that every year we basically set aside a certain percentage of our net earnings and put them into community investment type programs. So, and that's what you'll see here. Basically, we call that our community dividend. So we funnel this 10% through our member financial institutions into these programs that we'll talk about today. And I say that because a lot of times we get questions about what exactly is the source of this money. Is it government money or where is it coming from? So it's actually private money. It comes from our net earnings. Yeah, I hadn't thought of it that way, but that's a good way to describe it. So like I said, it comes out of our net earnings and we put it into these different types of programs. And we basically use it goes as equity into different transactions. So, and it has some both direct and indirect benefits to our shareholders, those financial institutions that we talked about, as well as the developers, home buyers, and the overall community. So this slide just kind of shows you how all the pieces fit together. The way that we make money as a Federal Home Loan Bank is by providing loans to those financial institutions. And then the idea is that we also take that 10% and put it out through financial institutions. So hopefully that helps local communities grow. Hopefully it helps you develop from a housing perspective, job creation, increasing tax base, all of those benefits that can be indirect benefits of the money. So this kind of shows you how all the pieces fit together. So now just to kind of talk about, we have basically 2 buckets of products. So what I'll focus on today are primarily the rehab products that we offer, and I think that matches well with some of the other programs that you all are doing. But we have 2 buckets. One are what we call our purchase products. So those are funds that we allocate for down payment and closing cost assistance for home buyers. The rehab are really designed for existing homeowners that are looking to do either energy efficiency type repairs or accessibility type repairs to their home. So the benefit for you, if you're looking to participate in these programs, and how many of you are looking for ways to generate fee income to support? Okay, so the good thing is by offering the rehab products, it's a great way for you to generate fee income. So if you're doing the things that you're normally doing in terms of working with homeowners, helping them figure out what work needs to be done, hiring the contractors, all of that, you can actually get a fee for your role in that process. So we'll talk a little bit more about that in a minute. The good thing is the money is also flexible. It can be used with other funding sources. So I know a lot of times you may be using your fundraising dollars, or you may be accessing other money that could be available in your communities, but these funds can be leveraged with other funding sources that are out there as well. So over the past, actually a year and a half or so, we have gone from just offering one product that was a down payment assistance product to first-time home buyers to now offering a total of 9. So we've expanded quite a bit, and those rehab products are all totally new. So they've been developed within the past year and a half or so. And so the products that we offer are all shown on the screen, but like I said, the ones that I'll really focus on today are the rehab products. But just know, in case you have customers that need down payment assistance, we offer that as well. One other distinction I want to make, of course, we are the Federal Home Loan Bank of Atlanta. So our footprint basically includes Alabama, Georgia, Florida, DC, North and South Carolina, and of course Georgia. So if you're outside of that footprint, not all of these products are going to be available to you, but the veterans products that we'll talk about are available throughout the country. So anywhere that you're doing business, you would be able to access the veterans products. And like I said, these are the down payment and closing cost assistance products that we offer. And I know it's hard to see on the screen, but you have the matrix there that hopefully gives you kind of the detailed information. But basically, these are matching funds where the home buyer has to bring some money to the table, and we match $4 for every dollar they put in. So it could be up to, depending on the product, up to $15,000 that they're accessing. Now, the rehab products, the first one I'll talk about is what we call our energy efficiency and weatherization product. And this one is really designed for existing homeowners that are looking to add maybe a new roof, new HVAC system, new windows, those types of repairs to make their homes more energy efficient. So they can get up to $12,000 that they can use towards doing those type of repairs. They do not have to pay this money back as long as they stay in the home for 5 years. And during that 5-year period, there's no repayment. Like I said, the only thing we're looking for from a qualification perspective is that the homeowner has owned the home for at least a year. They don't have to own it free and clear, but if they've owned the home for at least a year, then they can take advantage of that $12,000 to do those types of repairs. It's flexible in terms of property type, so if it's, of course, a single-family detached unit, if it's a condo, townhome, all of those will be eligible for this product. So any questions on the energy efficiency? Sure. Mm-hmm. 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 Uh-huh. Really? Mm-hmm. And it may be a little bit different. I'm assuming you were working with the Federal Home Loan Bank of Indianapolis. Okay, so they may structure theirs a little bit different. But for us, if they, for some reason, did not stay in that home for 5 years, they could be subject to repayment. And the way that would work, it would be prorated. So if they, for whatever reason, mm-hmm. Well, in ours doesn't work that way. So in our case, it would be only if that homeowner actually sold it, and for whatever reason, if there was enough money left over from the sale of the property to repay what they owed, then we would recapture. But we would never come after your organization in that case to repay the money. Yes, it goes to the homeowner. So like I said, I'm not quite sure. The Federal Home Loan Banks, we're all connected, but we operate pretty independently, so their program may be structured a little different from ours. Yeah, well, the way we protect against that is for the 5-year period for all of these products, we'll put, or the bank that they work with will put a lien on the property for that 5-year period. so they would know in some event if the home was sold. And there was a well, hopefully the next time will be a little better. Was there another question over here? The homeowner, technically the homeowner applies for these, but they would apply, and we'll talk about it in a little more detail in just a minute, but everything that comes to us is going to flow through one of our member banks is what we call them. And so ideally the homeowner would work through you would work through the member bank, and then the member bank would submit the application to us. Was there another question? Okay. So the next product is the accessibility rehab product, and this one is designed for homeowners that are looking to do, say, a wheelchair ramp or widening doorways, things of that nature to make the home more accessible. It's the same $12,000. They don't have to repay it as long as they stay in the home for 5 years. And so it's again pretty flexible in terms of the types of homes or properties that it can be used with. And so both of these products are available through our member bank. Now, these two products in particular are only available within our footprint. So if you're in one of those states that I mentioned before, then these will be available to you. Mm-hmm. Mm-hmm. No, we don't do, you mean like credit score, that sort of thing? We don't look at that. We don't look at credit scores. We don't look at loan to value. You know, if there are other liens on the property, we don't look at those sorts of things. Right. So primarily what we're looking for is a household income. And by regulation, they have to be at or below 80% of the HUD median income for that state and county. And I think from what Brenda said, that matches up pretty well with some of the homeowners that you're already serving. So that's what we're looking for primarily, that they qualify based on that income. Yes. Mm-hmm. Mm-hmm. So what we do, those sorts of things, project management, those sorts of things are what we consider soft costs. And so the limit is that the soft cost can't be more than 20% of the hard cost. So if you're doing 10,000 in rehab work, then your soft cost couldn't be more than $2,000, 20% of that. Hmm. Yeah, it definitely, and I think I have an example in here where we'll kind of walk through that later. But yeah, it definitely can turn into, depending on how many you're able to handle capacity-wise and all of that, it could definitely turn into a good revenue stream for you. Yeah. Federal Home Loan Bank of, yeah, did, yeah, uh-huh. Mm-hmm. Typically, the other federal home loan banks all offer some sort of first-time home buyer program. They don't necessarily offer these types of rehab products. They may or may not. If you wanted to access through us, you could access certain products, like I said, but it would just have to be through one of our member financial institutions that would also have a presence in your area, which could be like a Bank of America, SunTrust, or someone. I'm not sure about Missouri, but some of the larger banks typically would have a presence throughout the country. And if they're members of ours, you could still access it through us. Mm-hmm. 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 Right. Now, through us, they would have to contribute at least $1,000 in order to qualify for that 4-to-1 down payment assistance. There is a minimum, so it'll have to be $1,000. But again, that's for us. So if you're working with another Federal Home Loan Bank, it could be totally different. But we just look for the home buyer to have some sort of skin in the game. And the idea, it could be if they're paying earnest money, it could be if they're paying for an appraisal or anything else that they're paying outside of closing. It could be a gift from a family member. So those sorts of things will qualify towards their contribution. Okay. Yes. Thank you. Yes. Okay. So the veterans products, these are the products that are available throughout the country. And we actually just launched these products last year. So they're actually still less than a year old at this point. But for the veterans, on the purchase and down payment side, the good thing for veterans is whereas normal home buyers would have to contribute some money and match the 4 times that amount, veterans don't have to contribute anything in order to get the down payment assistance. So they could get, any military veteran could get $7,500 that they could use toward their down payment and closing costs. Yes. Huh? Mm-hmm. Right. So please don't let me forget to talk about that. Um, But so on the veteran side, we basically have distinctions between veterans and then what we call returning veterans. So veterans are anyone that has served in any branch of the military or a surviving spouse. The returning veterans are basically those that served overseas, so those that are coming back from Iraq, Afghanistan, or it could even be they served overseas during the Vietnam War. There's no time limit on that, but at some point they served overseas in a conflict environment. So on the purchase side, we have for any military veteran, $7,500 for down payment. For returning veterans, they can actually get up to $10,000. And then on the rehab side, for military veterans, they can get $12,500 to do either energy efficiency type repairs or accessibility repairs. And you'll notice for the veterans rehab, those two are combined. And the reason why is we didn't want a veteran that needs a roof and something on the accessibility side to have to choose one product or the other. So the way we have it combined for veterans, they can choose under any of those different categories exactly what work needs to be done on their property. So returning veterans can actually get up to $15,000 that they could use for either energy efficiency or accessibility repairs. So we're really excited in particular about these veterans products since they launched, I think, last April, particularly because they give us the opportunity to expand outside of our district and because, of course, right now there's such a focus on making sure that those returning veterans are able to make sure they make a necessary adjustment to their homes and able to purchase homes. So we're really excited to be able to offer these products. Well, thank you. Yes. I'm sorry, what was that? Yes. So basically the way this works is there's a total pool of money, like I said, based on our net earnings, and we make that information available. So at any given time, you know how much is available, and then it's just first come, first serve. Uh, It is, it's done on an, it's done on an annual basis, and so we haven't received the allocation for 2013 yet because it's going to be based on 2012 financials, but we've already started taking applications for 2013. And so we're actively funding right now. And then we'll just fund first come, first serve until that whole pool of money is used up. So for instance, last year, we actually had a total of about $25 million that went out through all of these different programs. And for the rehab products, we actually do have some parameters, and I won't go into detail on all of these today, but one of the ways that we really try to streamline the process for individuals that may be applying for the rehab is we try to tell you for each particular item that's covered exactly how much you can pay under that particular item. So that's what we have here. So for instance, if you're doing, I'll say an HVAC system, it can't be more than 55% of that $12,000 max, so the $15,000 if they're a veteran. So that really tries to help you understand. So if you're trying to figure out, hey, exactly how much can we spend on these different items, we tell you exactly what the limit is under each of those categories. So this is just an example. So say, for instance, you identified 15 homeowners that you wanted to take advantage of the rehab products. So under that scenario, each rehab was $12,000. And you wanted to do inspections. We do require both pre-construction and post-construction inspections just to make sure on the front end, of course, that the work actually needs to be done, and then on the back end that the work was done. And that protects you, that protects us, protects the homeowner, everyone involved. So exactly how much could you earn, to the point you raised earlier, if you were to repair 15 homes, how much could you earn in terms of fee income? So again, this is an example. So the actual hard cost was $10,000 under that total $12,000. $2,000 of it goes to soft cost. So we do require all of the homeowners or home buyers to go through our program, to go through counseling with Credibility, which used to be Consumer Credit Counseling Service of Atlanta. But that counseling is a little bit different if they're, depending on whether they're purchasing a home or rehabbing the home. But basically, all of them go through counseling. It's done over the phone, generally takes about 45 minutes to an hour. So it's pretty convenient for the homeowner. But we do require that counseling just to make sure they understand, maintaining the home and those types of repairs. They talk about budgeting, making sure you're saving to do any additional repairs on your home, that sort of thing. So that cost for that counseling is $150. That's paid out of the money that we provide, so the homeowner not having to pay that out of pocket. And then the inspection fees. So under this scenario, you could possibly earn $1,600 for each home that you rehab. And then in terms of how the process works, and we touched on this a little bit earlier, but the idea is that you would be working with the homeowners to identify which ones actually need work, what type of work they need to have done. And then you would find a member financial institution to partner with. And all of those applications are going to flow through the member financial institution. On the rehab side, we actually reimburse once the work is done. So typically the financial institution, they could do a line of credit to your organization to finance the type of work until we reimburse. So we're flexible in terms of how that works. And there are a couple of resources available. So we do have a member directory on our website, and it's broken out by state. So if you want to see exactly what members are in your community that could possibly participate, that list is out there. And then we have a list of members that are currently participating in our program as well. And that list actually has contact information on it. Yeah, I'll make sure. Yeah. And this, yes. That would be up to the bank to determine that. So whatever member bank you work with, they would determine how they want to qualify you in terms of a line of credit. But the idea is the bank is a little more comfortable because they know at the end they have the money coming from us to reimburse them. And we're going to, once they submit an application, we're going to approve that homeowner before any of the work actually starts. And this is actually an example. I don't know if we can play it in here, but one of our member banks actually partnered with the city of Montgomery in Alabama, and they actually had some local press coverage about them offering the rehab product. So this is just an example of some of the news coverage. Let's see. assuming this is not going to work, but.
Families who want to better their living conditions. And as WSFA 12 News reporter Demetria Connor explains, there's over $1 million set aside to help. It's a story that's new at 10.
Montgomery City Planning Director Robert Smith says the First Tuskegee Bank has literally set aside $1.5 million for low-income people in need of housing assistance.
Either purchase their first new home or basically rehabilitate their existing home.
Smith says the bank wants to help as many people as they can.
They may very well likely get other benefits from doing this, but it's mostly all about their goodwill to the community and showing that they care about the low to moderate income persons in our city.
Teresa Love has lived in the West Fairview area for 6 years.
I think it's great because, a lot of people that own their own home might need, some assistance.
She hopes this new program will help enhance the look of the homes and the neighborhood.
If the homeowners themselves, step up to the plate and do what they're supposed to do, then the neighborhood will be better.
Here's the breakdown of how the money will be dispersed to those who qualify. Option 1 offers $5,000 for first-time homeowners, down payment, or closing costs. The bank will give you $4,000 and you will have to match it by $1,000. The community stability option is the same amount. To keep your home from going into foreclosure, $12,000 is available. The bank will give you $11,000 and you come up with the rest. Accessibility assistance for persons with disabilities. No match is required, and that's the same for those who qualify for energy efficiency and weatherization assistance. Smith says the Federal Home Loan Bank in Atlanta gave First Tuskegee Bank the funds for this program. Veterans can qualify for even more money, and it's a first-come, first-served basis, so apply now before the funds are gone. So far, there are 20 applicants. Valerie?
All right, thanks a lot, Demetria. Your program can help a lot of folks. Now, to apply, call the City Planning Community Development Division. That number, 625-2997. If you don't get an answer, just leave your name and number and a message. Well, have you ever...
I will say the city of Montgomery was flooded with phone calls after that news story read. So I don't know if you necessarily want to go to the news with that, but definitely a way to get the word out. And lastly, here's my contact information. Like I said, I'll make sure, I have some cards with me, and I'll make sure Brenda has my information as well. So hopefully what we've done today is kind of give you an overview of what's available, and hopefully this is the first of many conversations. So if you have questions or if you want to speak with me about the products in more detail, please feel free to give me a call.